Welcome everyone to another 144 Analytics video where we try to explain how to use the Fibonacci retracements with the 144 rules and guidelines. We do this, it's educational for all of our members, premium subscribers, and for people that could be future premium subscribers. But in essence, either way, if you don't become a subscriber, you can still take this information into any market and trade any market based on these retracements and what you can expect from them. As you can see here in Tesla, we've done this one all here before, and we're just going to quickly go over where we left off in the last video, and that was that on the 5th of April, we had said for Tesla that until it either got down to 78.6 or it took out a retracement back up to this high, that the market was still going down. Well, sure enough, we hit the 78.6 and the market exploded from there and has already gotten back to 38.2% of this move down, which keeps this trend down for right now. But as we always say, we watch every retracement on every move just to see what's changing within it, how weak, how strong the market is getting. Long-term target from a 78.6 retracement is 78.6 the other way, and that's all the way up here at around the 265 level up there. Right now, the market has come off from that 38 and is holding 38 of this. If this is all this market can do, we will be looking for the short term to 236 or 61.8%. And if that comes out, we're looking for back down to 78.6, and possibly then that's where the bigger move starts. Just as it ended this move when it came up, stopped at a 78.6% retracement, and then the market's been down since then. And even when it hit 61.8, it hit 61 again, it hit 23. This is just all you're going to see again and again. This is a beautiful market within on the Fibonacci retracements, and most are when you're following the rules and guidelines. The other one we did was coin, and we left you up here. The market was still just coming off a 61.8. Market's still coming down. Our long-term target, 61.8 to 61.8, is the 61.8 rule. And that's 127 down there. We're looking for that. Short-term target is 38. If all it can do is go 38% back, then the market has some more upside and should go for new highs, just based on a 38% rule. It's all what is holding. It's not that everyone's going to hold, but when they do, as you can see in here, all of these levels eventually hold one of these retracements and then get the movement from it. So we're still looking down here up above. If they rally this thing again up around 264, again, that could be the end of this bull for another reason. You already have 61.8. You can probably go back, test that area, and come off from 78 would be that you could get an even bigger move down, but we already are looking for 61.8 this way. Now, the other one that we left you with was were the Hogs, and we were right here at the last update on this thing. First, we'll start out, as you can see, all these highs and lows that have hit the Fibonacci retracements and or major Gann squares, and how important just knowing where these levels are. Again, does everyone work? Not necessarily, but when it does hold at these levels, you know what to look for based on our rules and guidelines. 61.8 up here on top. We said that the long-term target is 61.8 the other way. That's down around 96. And again, watching every retracement, here we are at 38% back. Hits it exactly just when you take this movement right here. What does it do? Holds 38 perfectly, goes up, and fails to make the new high, which is always a sign that something's changing, but especially this is, as we just said, that 78.6 is a rally killer and a rally starter. So it's right here again, goes up to 78.6 and fails. And now we already knew that 61.8 was our target, but here's a secondary thing. We did hold the 38, and then went to the 78. And again, all of our subscribers get this well in advance, the levels to watch for. And this is what we're looking for down here is 61.8 because of the 61.8 rule. Now, what we said, what's coming here, and we can take a look at what's happened to the grains. And we take a look at, this is corn on the nearby, and this was May. And what charts you have to use, because these contracts don't necessarily, they don't trade very much when they're far back, and sometimes they don't get the extreme high or low in them. So we use what's called a continuation chart of that same contract. It's a big thing that Gann always did. And 78.6 was right here. That's what we told our subscriber was could be the base of the next bull market or a good spring rally anyway. And here we are. We've come up to 38.2%. Our target now short term is just 475. We think there's a lot more on the upside, but again, you're going to have setbacks and everything. So we're measuring those. Anything you can see coming back here, we'd probably be looking about 78.6 down into this, and then right here with the 419 3/4 major Gann square, something like that. You could look for the market to trade back to if we react from this level right here. And this thing could just take off here, but like we said, our target right here, we think there's a lot more coming, but that's our target right now, 475, just even based off of what we hit down here. Now when we look at the wheat, we had no reason other than the major Gann square down here, and in fact we thought it's even further down was the next retracement, but you can see, but it held a Gann square. What gave us the thing to watch for and what made us think that the market's turning is, one, when you went from 38% of this move, as you can see, that's 38, this high here, this one from here to here, it was 38%. Then we take this high, we take this down, and you can see that this rally hit 38%, keeping this whole trend very negative. Now again, we just, in reverse, we said, if this thing can't make a new low coming off of 38%, it's telling you something's changing. But then again, when you do it at a 78.6% retracement, we told our subscribers that this is the level that would need to hold. This is what we would be looking for, other than those long-term levels down below, as a sign that the market could be turning. And look at that rally. I mean, it just took off from there. Fell a little short of 38% here. Of the higher move up here, we think longer term this thing's going a lot higher. And as you can see, the other thing, the secondary reason why we think the market's turned is that you start to hold the retracements underneath in 38 or 23%, and this market just sets back and then just holds that. So we had the 78.6 on the bottom telling us because the thing failed to make the new low. Again, 78.6, that's rule is that's where a lot of bull markets start and end. And you saw it end, the one in the hogs, and you're seeing it be the thing that started in the wheat here. So right now, as long as they can hold above this 97, we're looking for higher things. Right now, short-term target 655, and that's how we're looking at all these things. We just want to keep doing these videos because it's the new things that matter, not showing you stuff that's happened 3 years ago and saying, oh, this is how it works. This is day in, day out. We'll give you the levels, what to look for, and why we put it in all the different markets. And you'll see, other than, even though we only cover the grains and livestock in our premium members, we just want to prove to everybody that this stuff works in every single market, every stock. It doesn't matter. So hopefully you're getting the drift of this and learning a little something. Please subscribe to our YouTube channel. Give us a thumbs up if you can, if you like it. And if you really like it and trade the grains and livestock, please become a premium member. We truly appreciate that. So until the next video, good trading.